First of all, I would like to start my intervention by thanking QD for this extraordinary opportunity to put forward our first views on the green paper for the Capital Markets Union, because of course, as you will probably do, we will gather the opinions from our member organizations, and as a matter of fact, this is a great a big priority for us, and as a matter of fact, that's why we are dedicating our annual conference to this very topic, to the CMU on the 6th of May. So you're all invited. And just to start with my first views on the green paper, I think it's very positive that it refers explicitly to the role of retail or individual investors in this CMU. Maybe there should be a bit more than just one page dedicated to them. However, but as regards to the key principles that have been put forward, I think that it is very important that the Commission has referred to this need to ensure an effective level of consumer investor protection. And as a matter of fact, what could be done to make this protection effective indeed is further implementation, especially by national supervisors, of the single rule book that already exists. So I agree with the Commission when it says that it's not only about creating new rules, but as a matter of fact, we really need to have a fully functioning single rule book. I, however, did miss a reference in these principles to a possible encouragement of the presence of citizens in capital markets, because as a matter of fact, this would make firms benefit of the longer holding periods of equity that individuals have on average as regards to institutional investors. Because as a matter of fact, the average turnover rate is over 100% of firms' equity. That means that in 1 year, on average, all the shares change their share, the holder of these shares. So this direct presence of citizens would also benefit themselves in the sense that they could potentially achieve higher returns for their savings on the long run. And this promotion of the direct presence of citizens could be achieved via direct equity holding, which in the latest years has been much less popular than the holding of packaged products, because the retail investor, or the individual investor, if you allow me to use this term, is advised just between the existing range of packaged products. But however, plain vanilla equity is not offered especially by intermediaries, since of course it does not deliver commissions neither to themselves or to manufacturers. So this long-term capacity of investors, or of individual investors, to fund the real economy comes especially due to their need to invest to save long-term for retirement, for real estate purchase, for education and health. So this could also be especially important for SMEs, because yes, they need access to finance, but they need access to long-term financing. I think that this is a distinction which is positive to make. in this sense, the cross-border holding of equity should not face any discrimination vis-à-vis the equity of companies located in the same jurisdiction as the individual investor is based. This is important. It is important that the Green Paper has mentioned the revision of the Shareholders' Rights Directive and its implications for the Capital Markets Union. We need to ensure that voting rights can be exercised cross-border without any discrimination, as the way they would be exercised in their home country, and ideally, and why not, without any cost for the retail investor to exercise these voting rights and to engage with the company. And I would like to have a short comment on the consistency of the CMU initiative with other current regulatory processes. The FTT, this wide basis which is considered to be put forward for the project would imply that citizens, that individual investors would be taxed or penalized, we can say, for making this effort to reach out to fund the real economy via regulated open markets. And I believe that this is not only unfair, but especially inconsistent from a policy point of view. I was very interested to listen before to Mr. De Backer's remarks on the risk-reward, and I believe that the risk aversion of citizens is exacerbated by the low financial literacy, as Alexander was saying before. And that is why the continuous decreases of the ECB interest rates do not manage to attract individual investors and their savings into the real economy, where they would be achieving fair returns on the long run, as I said. Because as a matter of fact, it's a matter of perception. Citizens are not perceiving capital markets as indeed they are the most effective mechanism to fund the real economy, but they just see them as a casino. So this is, of course, due to misunfortunate events such as large financial scandals, the benchmarks cases, the Forex, just to name two of them, and other failures, in many cases consisting in asymmetry of information, such as large mistakes in firms' auditing. And therefore, the reputation of financial markets has been largely undermined. And if we want to put a solution to this situation, when we speak about financial education, we should first of all be aware of the fact that financial literacy is extremely low. Because outside our bubble of financial experts, as it's the case of today, we need to realize that large segments of the population do not fully understand very basic financial terms, such as the difference between a share and a bond, or the difference between a interest and a dividend. And this has been shown by all the surveys on financial literacy, I know. And without citizens having these very basic concepts fully understood, you cannot expect them to participate and to engage in financial markets. In order to increase this literacy, well, this is a very long-term objective, and it would be necessary to integrate and incorporate the stakeholders' views into an EU-wide strategy, which should be long-term, as I say, and parallel to the long-term of the objectives of the CMU, especially improving market-based financing. and it's important that we can show individual investors and citizens as a whole that the CMU would put forward new opportunities, and that it is a concrete deliverable that will be delivering tangible benefits to them. And yes, good. And finally, my last remark on financial education. It has to come without any prejudice to consumer and investor protection because, among other reasons, we still do not have developed proper risk indicators for retail investment products. You are probably all aware of the discussions around the PRIPS file, and also this has been the subject of diverse consultation from the European supervisory authorities. And as a matter of fact, the ESAs have not made so far use of their potential, their capacity to ban certain products which are not adequate for retail investors, the so-called toxic products. So for the sake of time, I think I will stop here my intervention, but I hope to come back to these topics in the Q&A session, of course, to any other topics you would like to discuss. Thank you very much.